Well, hey there, everyone. Hello, hello, hello. Welcome to our Tip Tuesday, except it's Wednesday because we goofed yesterday. And so we moved it to today. So we're here Wednesday for our Tip Tuesday. Hey, Shonda, thanks so much for being here live. Folks who are watching live, let me know you're here. Always love to know when folks are here. And also, right, I guess it would be above my head or maybe below, depending on where you're looking, should be a link that says we are live on StreamYard. Click this link. That way I can see who is here, who is asking me questions, who is commenting on the post. So we are going to dive in today. So today's Tip Tuesday, Tip Wednesday, is all about self-employment tax. This is actually a question it's come up a lot from a lot of folks in the community, getting kind of confused about income tax versus self-employment tax. So I wanted to run through how we actually calculate self-employment tax. And I'm going to talk about this when I get into the slides. But the reason why this matters is because if you are self-employed and you are setting money aside for taxes, you're probably thinking about your income tax rate, like, oh, maybe we pay about 20%, 25%, whatever it is, and you're setting that aside. But now that you're a business owner, you also need to think about self-employment taxes as well. And by the way, this works for you if you are a sole proprietor. This works for you if you are a member of an LLC or a partner in a partnership. It also works for you if you are part of an S corporation, because even though as part of that S corporation, you're going to be paid via payroll and payroll taxes come out of that. You're also going to have hopefully profits above your payroll. And so you need to worry about, you don't need to worry about self-employment tax for that. What am I talking about? I knew that. So actually that's the benefit of having an S Corp is you don't need to worry about self-employment tax on that. But let's go ahead and dive into the slides. Y'all, I haven't had lunch yet. So I'm like, whew, I am hungry and I'm just talking funny. Okay, but let's dive in. I want to get this started. Hey, Brian, thank you so much for being here. Super pumped. All right, let me pull that back there. I don't like that. Let's do different. No, I don't like that. Oh, let's go with that. I kind of like that. Okay, cool. So how to calculate self-employment tax. And as I go through, if y'all have questions, drop them in the comments. I would love to answer them for you. So first, let's talk about what self-employment tax actually is. It's not income tax. It's actually basically payroll taxes. But when you're self-employed, you don't have an employer who's going to worry about those payroll taxes for you, so you have to take care of them yourself. Now, self-employment taxes are actually two components. They are the employer portion of payroll tax and the employee portion of payroll tax. You may or may not know this, but back when you were an employee, if you ever were an employee of another company, and you had taxes, payroll taxes, taken out of your paychecks, right? Well, that was the employee portion of payroll taxes, but there's also an employer portion, which your employer paid into the federal and possibly state payroll tax system. So that's what self-employment tax is. It's both of those components. Well, what actually is the tax rate? What do we got to pay? Tell me the details. So the self-employment tax rate right now, and has been the case for a very long time, is 15.3%. And it consists of two components. I want a little blue back here. Oh, that makes me feel better. I like that better. It consists of two components. So 12.4% of it is Social Security and 2.9% is for Medicare. So these basically help fund the systems that you will benefit from at some point in your life, if you're not already benefiting from them. Now, I do want to note, I don't think I have a slide on this. I do want to note that with Social Security, that is only imposed on income up to a certain dollar amount. Right now in 2021, I want to say it's $142,800. Don't quote me on that number. I'm close. But it changes a little bit every year. It goes up a little bit every year with inflation. So 12.4% on about $142K of wages. After that, you don't have to pay that 12.4%. 2.9% for Medicare on all of your wages, regardless of the amount. And I do want to mention there is actually now an additional Medicare tax that gets charged. I believe it's just under 1%. I should have the number in front of me. But that is over, once you hit a certain threshold of income, then you have to pay that additional Medicare tax. So if you've noticed that on your returns in the past, sometimes this comes up when folks are married and so their collective income pushes them over a certain income level. Just note that you may have to factor that in as well. That would be on top of the 15.3%, but 12.4% for Social Security up to $142,000, 2.9% for Medicare at any amount. Oh, hold on. Nope, tech's not working. There we go. The good news is you actually get a deduction for 50% of the tax. So you basically get to deduct the employer portion of self-employment tax, much like your employer would have deducted their portion of your payroll taxes back when you were an employee. So even though you have this big payroll or a big self-employment tax number you've got to pay, you also get 50% of that as a deduction. Now, that deduction comes off of your collective income on your tax return. So you don't need to put this deduction into your accounting system or anything like that. When you or your accountant goes to file your tax returns on page 1 of your Form 1040, your personal tax return, Form 1040, kind of at the bottom, that number will actually get added in there. It's an adjustment to income. It reduces your income by that deduction amount. So that is the good news. You get a deduction for 50% of the tax. So the effective rate for self-employment taxes is actually not 15.3%. When we say effective rate, we mean effectively what you pay. So it's not 15.3%. It ends up being less because you get that deduction. So there is some good news in all this. Now, a question I get a lot is, well, when do I pay self-employment tax? So self-employment tax is calculated, just like I just mentioned, on your Form 1040. It's actually a form called Schedule SE. Goes through the calculation of how much self-employment tax you have to pay. And that Form SE is included with your Form 1040, which you file usually every April or sometime between April and October for the prior tax year. But here's the big but. You have to pay in estimated taxes every single quarter for self-employment tax. So even though the calculation and the forms and all that don't happen on the following April, you owe that self-employment tax every quarter, much like you owe income tax for your business or for any other income that you earn. So this is why we want to pay attention to the self-employment tax, because as we're setting tax money aside in our business to pay those quarterly income estimated taxes, we also have to set aside money to pay the self-employment taxes as well. Now, I literally just said this, but I want to reiterate it. So let's just say you determine that your income tax rate is about 20%. So you're going to set aside 20%. Well, you're also going to want to set aside that 15.3% for self-employment tax. Now, remember I said you get a 50% deduction. So if you're feeling a little savvy and you want to get hot with some numbers, instead of setting aside the 20% plus the 15.3%, you could actually do a quick little calculation to figure out what your self-employment tax would be, 15.3%, and then subtract the 50% of that deduction from your business income, and then calculate your 20% income tax on that portion. So it's getting a little savvy with it, but it gets you closer to your actual number that you'll pay. If that feels like too much, then maybe you just set aside the 20% for income tax, again, assuming that's the right tax rate for you, that's just my example, and the 15.3% for self-employment tax. The upside of doing that is you'll probably have money left over. You probably will have extra money that you won't actually need to pay in, but you've got the cash saved. So hopefully that helps kind of clear up what self-employment tax is. This is a bit of a shorter Tip Tuesday or Tip Wednesday because I didn't want to go like I didn't want to overcomplicate this. Frankly, it's a fairly simple calculation, and I wanted to just get you this information so that you have it, because I know a lot of folks have been asking about this, especially as we're coming up on tax time and folks are doing that Schedule SE. And so people are asking questions. I want to give just a few seconds here in case folks, I know we've got a bunch of folks watching live. If anyone has questions, feel free, please drop them in the comments. I'm happy to answer them now. But I did want to keep this one kind of short and sweet because we don't need to overcomplicate taxes if we don't have to. They are already super complicated to begin with. So I'm going to give it a few more seconds for that. And I do also want to remind folks while we are waiting that if you have not already, definitely grab access to my free, completely free Biz Money library. It's where I store all of my best Biz Money resources. And spoiler alert, we're actually doing a complete overhaul of it. And I'm super pumped. But on May 1st, we'll be announcing this May 1st, it is going to be completely overhauled. So we're putting tons more great resources in there. We're making everything searchable. We're getting you audio transcripts and captions and lots of downloadable guides and things like that. It's going to have a lot of great stuff, but you can sign up now and start enjoying what's in there now anyway by going to megkwheeler.com/free. So don't forget to grab access to the free Biz Money library. Okay, so Brian has a great question. How do you estimate this for a brand new business? So here's what I would do, and this is why I wish I had a whiteboard. I said this in past videos. I'm working on my tech setup, and one of the things I'm getting is a new iPad so that I can actually do like a whiteboard for y'all. But until then, bear with me. Here's how you would do this for a brand new business. You don't owe this until you've made money. So let's just say, we're in March, right? Okay, let's just say that in your business so far this year, you have sold $5,000 and you've had $1,000 of expenses. So that's $4,000 of business profit, right? So you would calculate 15.3% of the $4,000. And that's what you would set aside, and then you would pay in at the end of this quarter. Now, if you want to do the super savvy method I talked about before, you would, hold on, let's do some math. This is why we need the whiteboard. So 15.3% of $4,000 is $612. I'm going to write this down so I don't forget my number. Hold on. $612. So that's what you'd set aside, right? But again, that's just your self-employment tax. It doesn't include your income tax. Let's assume that your income tax rate you've decided is about 20%. Again, it may not be. I'm just using the number for example purposes. So your business profits for Q1 are $4,000. Remember, $5,000 minus the $1,000 expenses. So 20% of that is $800. So if you do the simple method, you'd set aside $800 for income taxes and $612 for self-employment tax. But let's say you want to get savvy and you're going to say, I want to make this a little more accurate. So we've got our $4,000 of business profit. We're going to subtract 50% of that self-employment tax, which is $306. So actually my business profits, y'all probably can't see that, but my business profits are $36.94. That's what I'm going to apply my 20% to. So now instead of setting aside $800 for income taxes and $612 for self-employment taxes, I'm going to set aside $739 for income taxes and $612 for self-employment tax. It's not a huge difference, which is why I say if you don't want to get super savvy, you don't need to. And the upside is you'll have a little extra cash set aside when you go to make those quarterly taxes. But that's how I would do it. Now, if you're brand new and you haven't made any money yet, then you don't owe any self-employment tax. You only owe it on profits of the business. So let's flip those numbers. Let's say you had $1,000 in sales this quarter and $5,000 in expenses. That's a $4,000 loss. You don't owe any self-employment taxes yet, and you won't until that flips itself and you've got profit. So, Brian, hopefully that made sense. Let me know in the comments if it didn't, or if you have any follow-up questions on that. I'm going to give it just a few more seconds because I know there's a bit of a delay. While I wait, just a reminder, if you are just hopping in, head to megkwheeler.com/free to grab access to my completely free Biz Money library. As I mentioned, we are completely overhauling this. I am so excited. We're making it so much more user-friendly. It's going to be searchable, and it's going to have really clear, easy steps for how to do what you want to do. It's going to have action steps. It's going to be really, it already is great, but it's going to be even better. So I'm super pumped. And you can get access by going to megkwheeler.com/free. And Brian says, yep, thank you. Awesome. All right, my friends, I am going to leave it there. Happy Tip Tuesday/Wednesday. I will see you back here next Tuesday for another Tip Tuesday. And in the meantime, if you are not part of my free group, head to megkwheeler.com/group. I will be in there tomorrow, Thursday, doing our weekly Q&A on all of your biz money questions. See you then.